Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get into what happened in Canadian ag markets today. All right, canola is up $6.40 at 702.30. Minneapolis wheat was down 3 cents, is at $6 even right now on the December. Kansas wheat was down 7.5 cents to 518.5. Chicago wheat down 8.75 today at 529.75. Soybeans down 2 today at and now trading at $10.09 and a half on the November. Soybean oil up 0.8 cents at 56, call it 56.8. Corn was down 4.5 cents at 389 and a quarter. The Canadian dollar continues to lose some value, down now to 72.65. We've got a Fed meeting coming up tomorrow. We're going to talk a little bit about that. Live cattle up 167 to 226.45 a hundredweight, and feeder cattle up 267 to 336.2 a hundredweight. Still trading very, very high. Those cattle markets are. All right, let's get into the meat and potatoes today. And by meat and potatoes, I mean vegetable oils. Here's the December soybean oil chart today. We didn't quite make a new high today, but came very, very close. We are continuing to trade near the top of the range here. Not quite besting the high done on about the 14th or 15th of July, but we're getting dang close. This market continues to be very strong as the biofuel story continues to play out in the marketplace. So that pulled up canola today. We had some good gains on canola. As you can see, it is still struggling to kind of get outside of this channel, but it did peek its head above that at certain points today. That could be a positive sign. You can see here that the 20-day moving average is kind of starting to smooth out and might try to rally again. That would be a good technical signal. Or we might want to watch for a rebound here off of the resistance and a test down towards the bottom of the channel. The next couple of days will tell us what is going to happen there. So if we do see a breakout, I think that would be positive. This would kind of turn this into a flag formation, and we might be able to see some continued gains, particularly if we continue to see that in the vegetable oils. Speaking of vegetable oils, the oil share today, this is the January oil share. All of these are relatively the same pattern. It's just slightly different percentages. I think this is a 50% oil share now. And what I mean by oil share is the amount of value that soybean oil contributes or is of the price of soybeans. So when you crush soybeans, obviously you get about 20% oil, 80% meal. When you multiply the oil times the oil price and the meal times the meal price, right now the oil is providing 50% of the value of a soybean. Again, this is quite high. It normally is not this high. The value in a soybean crush right now is in the oil. You can definitely tell this also by looking at the December soy meal chart, where we posted new lows today down near $276.5 per short ton. So this market is, I wouldn't call it free fall, but has definitely been lower over time. One of the reasons is that China has a glut of soybean meal at this time. It's likely to weaken during the peak U.S. marketing season later this year as record imports earlier in 2025 and really lukewarm demand from animal feed producers have pushed soybean inventories in China up to record levels. The world's biggest soybean importer is China. They primarily use it for animal feed. They have yet to book U.S. cargoes for the fourth quarter of this calendar year. And obviously there are some very closely watched. There's some people who are closely watching the talks between the U.S. and China. There will be some talks in Sweden this week, and so far, Trump has been able to negotiate purchases of ag commodities from other areas like Indonesia and things like that. So I could see it's possible that we might get a rally off meal if the deal includes some ag commodities or maybe even soybeans proper. But needless to say, the current fundamentals are there's not a lot of demand from China. They haven't bought anything for the fourth quarter. They have a lot of supply, so they don't need to buy anything right now. And that's the state of soybean meal, which is at opposite ends of the spectrum than soybean oil. And as a result, the value in the soybean is for crushing it for oil, at least at this time. All right. Speaking of soybeans, I'm going to be giving a market update on soybeans at Savita's annual soybean summit and barbecue tomorrow morning. So if you're around that area, it's at the kind of at the junction there of the what highways of it, 14 highway, and I can't remember the number, but close to the boundary trails health center there between Winkler and Morden, just north of there at their test plots. And yeah, I'm giving a presentation about the market state of soybeans. And so, yeah, if you're around that area of Manitoba, come and join us. It will be a fun event. Looks like the weather is going to be good, and there is barbecue, which is always a good sign. All right, moving on to the grain side, or at least the wheat side. Wheat, we saw a lot of weakness today and some pretty concerning weakness in a lot of the pits. September Chicago wheat here broke down below that kind of support level that it had been holding for quite some time near that 530 area. It's down below 530 now, 529 and three quarter. I think we could definitely see this now tested here down at about 521 or so. That would be the next support level before it makes a new low. So a little bit concerning in particularly the Chicago pit. The Chicago pit saw the largest losses today, at least from a percentage standpoint. Here's September Kansas wheat. As you can see, it came down as well and is testing that support that we saw earlier or just a few weeks ago in July. This market continues to be under pressure. Lots of supply out there right now as harvest just got completed. I think the 80% now of the total winter wheat crop at least is harvested according to the USDA's last crop progress report. Almost 100% in a lot of the hard red winter growing areas like Kansas and Nebraska and Oklahoma and Texas, obviously, things like that. So, lots of supply on the marketplace right now, particularly for hard wheat. This is also putting some pressure on Minneapolis wheat, which is sinking again to new lows. The December contract today closed at $6, so well below the 605 that we have been watching for quite some time. So it kind of begs the question, well, where could it go from here? So from $6, we don't have a whole lot. This is a weekly continuous chart, by the way. So it kind of combines all of the front month contracts into a continuous chart. Each of these candles is 1 week of trading. We are down to the $6 mark now on the most recent week, but we do have a support down here at about 560 from back in November, which would have been likely off of the March contract at that point as the front month. So still a lot of weakness that could come in here. Generally speaking, I would say that Minneapolis is underpriced relative to the cost of production for sure. I think that most farmers would agree with me that selling wheat here is below the cost of production, and that is not a sustainable place to have pricing. That means it should rally, but it doesn't mean it should rally right away. And I think that this marketing year, there will be opportunities to sell this crop at a profit. There already has been some opportunities to sell this crop at a profit prior to harvest. I know there are a lot of folks who have done that, which is great. But of course, nobody sells a significant amount of their production, or very few people sell a significant amount of their production prior to harvest. Maybe a third, maybe half if you're quite aggressive. So you still have quite a lot of wheat to market. So it might be a long, protracted bottom in this market. It definitely feels like it's heavy. Just to kind of give an idea of what the pricing looks like for cash wheat at this point. This is northern Alberta, which is more like central Alberta along the Yellowhead corridor. According to the PDQ website, which is the Alberta Wheat Associates, that would be it's trading right around 7.25. I'll get into some cash pricing here because I think there is a little bit of a dichotomy happening here between these posted bids and what we're actually seeing in the marketplace, which is normally the case. Here's the basis, though. We did see basis over the last few days rise. I think a lot of this has to do with the Canadian dollar. We're going to get into the Canadian dollar here in a second, but there's a couple of things that happen when futures decline. One is that it's harder to get farmers to sell, and as a result, we sometimes see move up in the basis value. However, there's also the currency exchange portion of it, which when the dollar falls, when the Canadian dollar falls, it does tend to make the Canadian basis look more attractive. Of course, that is all other things being equal. As a result, I think that the basis rise that we've seen over the last couple of days is probably a result a little bit of both, because when you do see futures fade, it does kind of create a calculation off the foreign exchange that is lower. So anyway, it's kind of six of one, half and the other. I think that the lower futures value and the lower amount of farmer participation is part of the basis move, and the other part is likely currency. Just taking a look a little bit at cash prices. This is an example from a grain company in Vermilion today. Again, their cash price is 272.16 per ton. That runs out at 740 a bushel. But I think there's better prices out there in the marketplace as well. These are, of course, our posted bids. Buck 43 is something, or sorry, that would equate to $1.43 in basis value. That's 740 price. And as you can see, that's already higher than what the Alberta Wheat Associates was reporting. So of course, that's an average of the area and posted bids only. So when companies want to attract some sellers, they tend to increase the basis a little bit. The highest price that we've seen so far today is $1.70 over. So that would be about 770 a bushel in that Yellowhead Corridor area, or the eastern part of it anyway. All right. Seeing as we did talk about the dollar, here's kind of the Canadian dollar view at this point. We've seen four consecutive days now of sustained losses, and we've made a new recent low here in this market, or at least we've moved to lower than we were in the middle of the month. We are still holding some of those lows that we saw in the end of June. That is coming along with a corresponding rise in the US dollar. So now the US dollar is seeing some gains today, as we're seeing trade deals come out from the US and other areas like the EU. um, and there are trade talks happening with China at the moment, which, based on the history of the other trade talks, there should be some positive headlines that come out of that, particularly from the US side. There is a Fed meeting tomorrow. They are going to set, or they're going to give an announcement on interest rates. I do think that most of the market thinks that they're going to stay on interest rates, meaning they're going to keep it at 4.25 to 4.5%. But there is some key points to watch in this coming up Fed meeting. One of them is that inflationary certainty from tariffs is still keeping the Fed on hold. So again, there's some folks, particularly one who really wants the interest rates to go down, and the reason that the Fed is hesitating on that is because of inflationary pressure. A lot of that inflationary pressure has to do with tariffs and the increase in price that the American consumer is seeing as a result of tariffs. And so it's difficult to lower interest rates in that kind of environment. And, prices last month, for example, jumped the most since February, and the overall inflation now has risen to 2.7%. The Fed's target, of course, is 2.2%. But there are some folks, not only President Trump is concerned about this. There are two Fed officials who are preparing to dissent against Powell if he is hawkish tomorrow. So as a result, we're not sure what the statement will say. I think that, obviously the fact that there's no rate cut coming in this meeting this month is that's been fully priced into the market. What might be still in the marketplace to be interpreted is the statement that Powell makes after, to kind of gauge whether he's still hawkish going forward or whether they're still dovish. There are a few Fed officials who are preparing to dissent if he is hawkish, or doesn't choose, or chooses to leave borrowing costs alone. And their concerns are largely with the labor market and things like that. So not everybody in the Fed is agreeing with Chairman at this time. One of the things that I think the market's going to be looking for as well is that the Fed may still lay some groundwork for a rate cut this fall. So, even though they're not being as aggressive as Trump might want, the Fed officials have said that they do expect to cut interest rates this year. And many are starting to think that the next rate cut may happen at the next meeting after this one in September. All right, make sure that you are subscribed to this YouTube channel, uh, youtube.com at Canadian Ag Markets. Hit the subscribe button to make sure that you are getting all of our videos in your feed. If you hit that bell button, it'll also notify you, this little bell button right here. It'll also notify you if we do publish new content. So if you want to do that, go ahead, make sure you like, and feel free to comment on the video. If you want to get our premium content, you can go to CanadianAgMarkets.com. You can subscribe to our insights for only 99 bucks a month. It's that simple. We don't try to sell you anything else, and you can cancel anytime. You just hit the subscribe button there, and it'll take you to the secure payment site where you can get that done. All right, that is all we have for you today. Again, I will not be producing a video tomorrow as I will be busy with the Civita event. So thank you very much. Have a great day, and we will see you again on, what is today? Tuesday? We'll see you again on Thursday. Have a great day.